back to the Forex Lounge Fundamental Extras. Today is Tuesday, May 18th, 2010. Welcome back, one and all. Great that you could join us. Bloomberg.com reports today wholesale prices in the U.S. unexpectedly dropped in April, the second decrease in 3 months, signaling the global recovery from the worst recession in the post-World War II era has yet to stoke inflation. The 0.1% decline in prices paid to factories, farmers, and other producers followed a 0.7% increase in March, the Labor Department said today in Washington. Excluding food and fuel, so-called core prices climbed 0.2%, compared with 0.1% gains in the previous 2 months. Getting to the charts, we can see the blue line represents the US PPI, again dropping to a level of negative 0.1% from the previous report of 0.7% in March. Violet line represents a 12-month moving average, which currently stands at around 0.5% to the positive side. So we can see we're both below the 12-month moving average and also below the zero line, indicating that inflation is not rising but rather falling. Now, compare the PPI, the Producer Price Index, that's the violet line, to the CPI, that's a Consumer Price Index. PPI measures a basket of goods or services on a producer level. CPI measures that on the consumer level. And we can see that if producer prices, as they tend to drop, this tends to add to the CPI, meaning if producers pay more, they add the extra costs on to the consumers. If producers pay less, sometimes the consumers get a break. So when the PPI drops, the CPI will oftentimes drop as well. Now compare the PPI, that's the blue line, to the Dow Jones Industrial Average. That's the violet line on the monthly close, last month closing just about 11,000. As the PPI drops, we see the Dow Jones Industrial Average tends to drop. When the PPI is strong, the Dow tends to rise. So this drop back below the zero level indicates that the Dow has a likelihood to continue to drop. Now compare also the PPI, that's the blue line, to the dollar-Swissy currency pair. During prosperous times when the PPI tends to rise, the dollar-Swissy tends to rise as well. During times when the PPI drops and the Federal Reserve is forced to cut interest rates, the dollar-Swissy tends to drop as well. With that said, if you have any questions, email us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.